I think for me, I try to ride the roller coaster for my clients so that they can just be watching.
Exactly.
And,
I love that. That's a really good saying. All right. Well, thanks for coming out today, guys. Looking forward to chatting all about mortgages today.
Amazing. Yeah, today we have Kari Moore. She can introduce who she's with, her team, her dad, her sister.
That's right. Yeah. So thanks so much for having me today, guys. Excited to be here.
So we thank you.
Yeah. And so the brokerage I'm with is George H. Moore Mortgage Services. And the George of George H. Moore is my dad.
That's amazing.
He's the principal broker. So it's a family business. And my twin sister's also on the team. She's a mortgage agent, been in the business for a couple of years too. So it's kind of the three of us rocking out mortgages.
Oh, that's amazing.
Mm-hmm. That is amazing. Mm-hmm. So is your dad still pumping it out as well, or?
He is, yeah, very much so. He is not ready to retire. I think once you really enjoy your job, it's easier to kind of stay in it and not retire. So he's gonna stick around for a little while, which I'm grateful for. I've been licensed for about 5 years, but as you guys probably know, this industry, there's a huge learning curve, especially at the beginning, right? And I take mortgages pretty seriously. You know, it's people's personal finance, and so I take that quite seriously. So to have my dad as my mentor to kind of get me going for the first couple of years was hugely advantageous. So very grateful to be a part of the brokerage.
Oh, to keep it in the family, and then obviously he's proud to have his girls working with him. So
absolutely,
that's amazing.
Yeah, I think he enjoys it.
For sure.
yeah, definitely.
Yeah, I was just going to say, I think that it's become pretty evident to us that you do take mortgages very seriously, and I think that that's one of the reasons that so many members of our team have connected with you and have just appreciated the fact that you are always on top of keeping us up to date on what's happening in the mortgage world. Because although we're in real estate and we're trading in real estate every day, we're not always thinking about that part of it.
Right.
We might be thinking more about the fun part of like getting into a new home, or the potentially challenging part of selling a home in this current market. So we're thinking from that perspective, but it's obviously a critical component to think about. Someone needs to be able to afford this, and they need to finance it some way. So
that's right.
Yeah, we just love that you've always been really on top of that. So
well, I appreciate that. Yeah, and our businesses are similar but different, right? We're very intertwined, and I think that's what's so important working with clients is that they have a good team. They need to have good real estate agents. They need to have a good mortgage broker, a good lawyer, and everyone works together to try and cross that finish line for the client. And I sometimes have to catch myself when I'm talking to clients because I nerd out to mortgages, and I have to really catch myself and be like, maybe they don't need to know the depth of that. I'll just tone it back a little bit. And but yeah, I take it pretty seriously.
Important.
Yeah, details. Yeah, I kind of equate it to like, I wouldn't try to do the electrical work in my own house. I would hire an electrician. And people shouldn't have to learn everything about mortgages. They just hire someone who does, right? That's my role, is to help clients understand mortgages as much as they need or want to know without having to, spend hours doom scrolling
right.
on YouTube trying to figure out everything about mortgages, Mm-hmm.
So ultimately, in a situation where somebody's looking to, become a buyer, they want to buy a house, they have their bank option, they have a mortgage broker. What is the difference between the two, and what would you say would be helpful to a buyer to come to you? Awesome. As opposed to go straight to a bank?
Good question. So there's a few things here. And the first thing that I'm noticing, especially with my clients right now and given the current rate environment, is people want guidance, and they don't always get that from the bank, right? And that's not to say every single bank, but at times the clients aren't getting the full guidance. And that's what we can offer, is we really guide our clients through the process. And then outside of that, the difference is that we work with many different lenders. So we're not directly affiliated with any one lender in particular, but we have access to many. So what we can do is get to know our clients, know their financial picture, know their financial goals, and then match them with lender or product options that can help them get there. So I think the big difference is just the sort of shopping that we can do for the clients, but also just the guidance and supporting them. And we're also not a transactional broker or brokerage. We are with you for the life of your mortgage. So my dad's been doing this for 30 years. I hope to do that as long as well. And we're not just there for you on your purchase, but we're there for you through the whole, on your renewal, on your refinance, on your next purchase, we're there the whole time for advice.
For sure, there's a lot of help you can provide along the way. Nice.
I love that. That's always been the way that we've approached real estate as well. Is it's not this like quick transaction, like we're in, we're out. It's about having a long-term relationship with somebody and really feeling like we are a team with everybody. And I love that you guys have a very similar approach.
Definitely.
Yeah. If you can, if you treat your clients like your family, I'm assuming you wouldn't railroad your family. So
I sure hope not.
So we always want to make sure that they know that if your brother, sister, or your dad or mom, we would take care of you the same way and give you the honest advice as opposed to being a unit. So that's amazing. Good values.
Yeah, absolutely.
We've heard that there's a lot going on with a lot of new renewals that should be coming up in the next few years. We actually just recently heard maybe a week or so ago that approximately 60% of mortgages will be getting renewed in the next 3 years. If there's truth to that, what's your take on that? What does that mean for people in the market?
Yeah, that's a great point to bring up because it is quite topical, I think. And, what we saw in 2020 and 2021 were really low rates. And so a lot of people took advantage of that, whether they were purchasing or refinancing or renewing or even just transferring lenders to get those low rates. And usually people will take a 5-year term. So we're approaching that 5 years, right? So 2025, 2026 will be the end of the 5 years. So we should see a lot of people's mortgages coming up for renewal. And I think what's important about that is I think the people who it's going to affect the most are the ones who perhaps entered the market in 2020, who have not had experience with higher rates. And
they have a 1.5%.
Exactly, and they're laughing, right? Yeah. So that's going to be a bit of a payment shock, right? So there's things you can do to mitigate that. And one of the things I'm recommending to my clients is, meet with me. Let's see what your payment would be if it were, a 6.5%, like let's go worst case scenario. Maybe you're a year out from your renewal, so we'll assume now that your rate would be 6.5%. That extra money that you will be paying on your mortgage, start paying it now. Just set it aside into some savings.
That's great advice.
Yeah, and then once your renewal comes up, you're already making that payment. You also could take that money and put a lump sum down on your mortgage at renewal, which would lower your mortgage amount, which will lower your monthly mortgage payment.
As
You can
the rate goes higher.
Yeah,
Yes.
exactly. You can extend your amortizations back out to 30 years, which will lower your monthly mortgage payment. So it really comes down to on renewal is the perfect time to kind of meet with your mortgage professional, shop around because you don't have to take the rate that your lender offers. Sometimes it's not the most competitive rate, right?
That's interesting.
Yeah. So shop around. Yes, you will have to requalify. So there's a conversation that needs to happen with your broker or mortgage agent. But shop around, see what's out there. It's the perfect time. There's no penalty to transfer lenders. And there are strategies to kind of mitigate that payment shock that we might experience or some borrowers might experience.
So how much time do people have? So if they know that their mortgage is renewing next July, so July 2024, how much time do they have to start shopping around before they're...
Depends on the lender. Some lenders let you renew a little bit earlier, but I would say reach out to your broker. If you're worried about payment shock, reach out as early as possible, like now, so we can start to put a plan in place. But usually you can renew, I would say within 4 months of renewal. Lenders will typically hold a rate 90 to 120 days, so you can renew that early, but start the process a little bit earlier, 6 months in advance.
So you're saying that the people that have a mortgage, they're coming due, they can jump into a bank ahead of time, just in case if the rates are going to be going up or down, they can still, as well, like a first-time buyer, they can still hold a rate for them for 120 days.
You got it.
That's amazing. Okay.
Yep, you got it. Yep.
Nice.
Yeah, which is helpful, right? And that's
Huge.
what's so big with pre-approvals is you can lock in with a lender. This is on a purchase or renewal. You can lock in with a lender, and if rates go down, you don't have to take that higher rate that you locked in at. But if rates go up, you're locked in at that rate, you're comfortable. And it's really important when we are talking about peak interest rates because, as you guys know, 2018, the stress test came into play for mortgages. So now we're qualifying at contract rate plus 2% or 5.25%, whichever's higher. And of course, we're higher than the 5.25%. So we're looking at contract rate plus 2%. So when you're purchasing at the higher end of your debt servicing, then your pre-approval amount will be affected once rates go up. So very important if you are shopping at that higher end of your debt servicing to get that pre-approval, get it locked in so that if rates go up, that may affect how much you can qualify for.
So the good thing is that when the stress test was first put in, obviously it's, I think, cushioned a lot of people to be ready for that, to know that they're financially stable at a bigger price point. Or sorry, with the price that they're purchasing their home. And when the renewal comes in, they're still going to be able to qualify, I'm assuming, as long as their job and everything is still steady.
You got it.
Because they've already been pre-approved.
Yeah.
Right.
You got it.
And so for buyers now and all, like, from what we see, it seems like the market's slowed down. People are scared to potentially buy a home. But we had a little conversation. What does it look like down the road for confidence in people with wanting to buy and or move up from what you've seen in the last, 12 months?
Yeah, good question there. So I think it's a bit of a mix. There's some people on the sidelines who are rare and ready to go. I think at first there was a lot of maybe fear or hesitation on the higher interest rates. And I think we saw a slowdown in the market due to that. But now, with the Bank of Canada having held the overnight rate for a few times, and the conversation in the media is that rates are going to be held, they're going to come down.
Fingers crossed.
Fingers are crossed. Yeah, big time fingers crossed. But I think people are a little bit more comfortable with rates now, which in the beginning, I think there was a lot of hesitation there, but now they're a little more comfortable. So a lot of people are, I think, ready to go. But then on the other hand, because rates are so high, it is pushing a lot of people out of qualification. So once those rates come down, they may be able to enter back into the market, which will, again, help with the influx of the housing market, I think, and have it running again.
Yeah, that actually just recently happened with me and a client that I had referred to you. They had previously owned a home and sold a home maybe a year or so ago, and then trying to get back into the market, and they no longer could qualify. So yeah, it's pretty crazy to think that so much can change in such a short period of time.
Exactly, yeah. And it's sort of disheartening, especially for, first-time home buyers trying to get in. But, the thing I always say is just don't give up, work with a good team, don't give up. And, if you're working with me, I'll put a plan in place to get you where you need to go to purchase. Sometimes it's just a matter of waiting to have a 2-year average on your income, especially for self-employed borrowers. There's things we can do to sort of structure your file in such a way and help you get where you want to be. But you just have to hang tight because it takes some time, especially when we're working with these higher rates and the more difficult or challenging qualification times, really.
Right.
For sure. And do you guys service a broad area, or is it just Prince Edward County, or is it just Quinte, or how does it work for you and your company with your dad?
Yeah, so we're licensed all across Ontario. We specialize mostly in Prince Edward County, Quinte area. My sister Laura, she tackles more of the Napanee sort of area, Napanee, Kingston. But we are licensed for all of Ontario, so I do have some clients sort of spread out, which is great. And I think it's especially beneficial to stay somewhat local, especially working in our rural communities, which is a little bit different type of real estate sometimes when you're working with wells and septics and things like that, right? So you want to work with someone who knows that area and knows the lenders who will lend there. But yeah, we're licensed for all of Ontario, so we can kind of spread out.
Amazing.
Cool. I wanted to just circle back. Alex had asked that question about what your thoughts were with buyers that looking to get into the market. Are you hearing from some of your past clients who are current homeowners that they're feeling the pressure that when their rates do come up for renewal, they may need to bail or jump out of the market? Like, I'm just curious what your thoughts are on that topic.
Yeah, I have seen not necessarily my clients who are concerned. I have had people come to me who are currently in mortgages who are concerned. Some people are in some sticky spots for sure. I've seen a lot more of that now. But a big piece of like what I try to do is just the affordability piece. So what I do is like create a custom budget for all my clients, and we go through, here's your monthly mortgage payment. This is what it could be. This is, are you comfortable with that? And I think that's really important to make sure that clients can absorb some of these higher interest rates. So, but I am seeing, like I said, I am seeing some people coming to me who are in some sticky spots, and they're not sure if they need to sell or kind of what to do. And that's tough to see, especially with home values going down. And, if they have a mortgage and the home value is down and they're not going to be able to cover that by selling, it's tricky spots for sure. Never want to see that.
So when those types of situations do come up, what's your course of action? Like, do you reach out to alternative lenders, or how do you help people navigate something so challenging?
It's tough. It's a lot of tough conversations, and we're lucky that we do work with a lot of alternative and private lenders. That's been actually a large portion of my dad's business is private financing. He's built up a lot of individual investors who will support some of those trickier files, which I think is key in assisting clients. But sometimes it's just a lot of tough conversations saying you should probably sell, or, let's look at all the options. Let's lay out the options. Can we refinance? Can we consolidate some debts? Things like that.
And see what's best for you.
And see what's best for the client. Yeah, but sometimes it is, they have to sell. They can't make the payments and there's no equity
Do you
left.
see potentially that there's going to be a lot more defaults? Because a lot of people are scared of that and talking like, people won't be able to afford their mortgages. Do you see that there'll be a strong percentage increase in that? Or do you think from what you see now, it should be maybe not so bad? Or
it's a good question, and I'm not really sure. I think it could. There's probably realistically going to be some defaults or some late payments just by nature of the market and the higher costs of things. I mean, we are seeing people struggling, but I sometimes think that it's a bit blown out of proportion in the media, just a personal bias perhaps. But so, all I can really do is just try to protect my clients and offer them the best advice that I can to make sure that they're okay to move forward. So it's a tough question. I'm not really sure.
No, that's a great answer, because I think that's why, to get back to the original point, is that they should reach out to you now and see what they should be doing to try and make those payments that are higher to make sure that they can, figure out how to do the cash flow now while they can, because once it turns into a higher rate from 1.5, it's hard for the cash flow to diminish that quickly.
Exactly.
So I think that's a great point.
Well, there's still plenty of runway instead of like wait till you're
exactly right,
and then you're trying to struggle at the very end. That's crazy.
Give yourself a buffer,
Yes,
right? Don't just
sure.
like. Sometimes it's so easy to put those blinders on because we're afraid, we're nervous, so we
It'll
just
all be okay.
avoid. But
Close my eyes and pull the blanket over my head. It's all okay.
Exactly. But
As
you
long
got
as
to
university
tackle it.
exam where you're like, I'll study
It'll be fine.
tomorrow, and then the night before you cram.
Exactly.
Not a good way to handle this situation for sure.
Or you have an upcoming speech or something. You're like, I'll just wing it. It's like, oh, let's not.
Exactly.
Yeah.
Good call.
Is there anything that's like I was impressing on your heart that you wanted to share or discuss?
I think one of the things I really wanted to touch on, and especially just by being invited here from you guys, is to the importance of really picking a strong team to work with. You guys go above and beyond for your clients. You do a great job with your listings and working with the clients I've
Thanks,
worked
Kari.
with.
This wasn't a paid advertisement. Oh, thank you. Appreciate that.
Yeah, and I've worked even with a few of your agents on your team who also have kind of that same high level of support. And I think that's key. You want to work with people who are like that and find a good mortgage professional. It doesn't have to be me. Hopefully it is, but it doesn't have to be me, who's going to take care of you, and a good lawyer, and, just have a good financial planner and really, emphasize that team aspect. And, we all work together behind the scenes for the clients to make sure it's going to be a nice, smooth transaction, a smooth closing. So I can't emphasize that enough, and lean on us too, right? Like, you guys are the experts. So clients should be asking you the questions and they should be asking me the questions. Don't try to do it all on your own. Like, we're there for a client. So that's just one thing I wanted to mention.
Oh, that's great. It's so true. Like, when it comes down to working with a buyer or a seller, really, all that we really want for that person is to know that they're supported. When we let them go to someone else, we just want to know that person's going to take care of them with the same kind of care and compassion and
Me too.
an approach that we would have had with that person. Again, so that, as Alex pointed out earlier, if you treat people like their family, that's really
the most you can do and ask
Yeah.
for. Yeah.
Absolutely. Yeah.
And it's nice when, like Dale's saying, like, to be able to pass somebody off and not have to worry about if they're going to be taken care of. Oh, it's a huge weight
Yep.
off your shoulders. So
I agree.
amazing.
It's the worst feeling. Like I had a client this summer who was working with a different mortgage broker. I won't say names, but that broker turned it into a very, very stressful experience for them, even though they were like hyper qualified. They had so much money. They were putting more than 50% down on this house. They turned everything into like a very stressful situation. Like anything that was slightly out of whack, it's like, oh my gosh.
Yeah.
And then they'd be calling me up like, is everything okay? Like, what do I do? And it's like, okay, hold on. Let's just take a breath. Let me call. Let's work through to figure out what's actually going on here. So again,
Good
we
point.
don't want that. We want it's just be smooth. And it's not to avoid having challenging conversations.
Right.
We don't want someone that's going to just like fluff over everything and be like, everything's going to be okay. Sometimes
Oh,
it's not
exactly.
okay.
Yeah.
For sure. Like with every situation, there's always a solution.
Exactly.
But it's handled in a calm way, not in a, oh my goodness, the world's going to end. Especially when, like Dale's saying, if you have a solid down payment, oh my goodness, why scare people? Just explain to them, hey, these are the challenges. What do you guys want to do? And most
Exactly.
people, with the proper information, will know what to do and how they want to navigate their life along the way.
No, those
Yeah.
are such great points. I think for me, I try to ride the roller coaster for my clients so that they can just be watching.
Exactly.
And,
I love that. That is,
like
that's
that.
a really good saying.
Yeah, and
It
that's
is going to be stolen. just so you know.
Yeah, like we talk about this, but we don't communicate it as effectively as that one
Yeah.
little phrase.
like we're freaking out on the inside,
Yes.
right? But we to our clients, everything's cool. We will have those hard conversations when
Yeah.
needed. But hopefully, if they're working with a proactive broker, they've probably already had those conversations before you've submitted the file. That's what I'll do to my clients is say like, okay, here's some potential things we might have to, mitigate once we submit, but it's okay. We've got solutions in our back pocket. We've got options, And that's one thing that certainly I've pulled from my dad's business. And what's really cool is I get to work with some brokers who know him or other agents who know him or clients. And the conversation is always like, your dad was always this calming voice on the other end of the phone. And that's something that Laura and I find very, very important to bring into our business is just sort of like a friendly service. We're there to service and help and make sure we can make mortgages as easy as could be possible.
For sure. Do you, so, when it comes down to buyers and people looking in different areas, because you service, obviously Quinty, do you see more people trying to purchase somewhere than somewhere else right now? Do you see like a shift?
Well, certainly throughout COVID, it was a lot of county purchasing and a lot of people coming from out of town purchasing in the county. So I saw a lot of that. And then it honestly depends on the client. For some clients, if you're entering the market, it's really challenging with these higher home prices and higher rates. So they almost don't have so much of a choice where to go. Like they're kind of priced out of the county, maybe priced out of parts of Kingston. So a lot of Belleville buyers. But for those who do have options, it's honestly a mixture. It's kind of like just depend. I'm sure what you guys see, right? Like it just kind of depends on what they're looking for. If they're looking for rural, if they're looking more city living, things like that. So nowhere in particular, but I think it just depends on the client's profile as to where they can go versus where they want to go.
We did touch on it a little bit, but it would be nice to circle back to some strategies that you employ to help protect people's cash flow in this really tight rate environment. Like I know myself from kind of early pandemic-ish. No, when was it? Maybe it was 2 years ago. My mortgage has gone up, like my monthly payments have gone up more than 100% because I still am on a variable rate.
Me too.
I wish I didn't do that. But anyway, I was on a variable rate and I was like, it's not going to keep going. No way. And yeah, so my mortgage went up a lot and that hurts. Like when you lose potentially $2,000, $3,000, perhaps some people $4,000 extra per month coming out of your cash flow, like, what do you do? How do you help people with that?
Yeah, great question. And my answer initially that I want to say is like, don't worry about it. Variable's going to come back down. It's okay.
That's what I want to say too.
Historically, it's been so low forever, and then all of a sudden,
yeah, it's a tough sell right now, but it's still a really great product, low penalty if you need to break, so it's a good product. But there are things we can do to kind of mitigate that cash flow, mortgage-wise and not mortgage-wise. And mortgage-wise, certainly we could look at re-amortizing and extending that amortization out to lower your monthly mortgage payment.
So do you have to wait right until the end of your 5-year term or 3-year term or whatever your term is before you do that? Or are there times where you say like, no, like come see me sooner and let's shift things up earlier?
Yeah, I would say anytime you're struggling with cash flow, come see your broker for sure. Let's just take a peek at things, see what the options are. We can weigh it out if you need to break your mortgage and pay a penalty to refinance or to reamortize. We can see if it makes sense to do that for you, right? But some lenders, because they're very aware of the fact that people are struggling, they are allowing you to extend your amortization. So you can even just call your lender that you're currently with.
That's
and sometimes,
so good to know.
Yeah,
Yep.
sometimes they'll push it out for you. Even if you are in a high ratio or in an insured mortgage product, the insurers are also allowing that. So that's a good first place to start, is we can look at that. Sometimes it's going to cost you money if you have to refinance. Sometimes it won't if the lender will do it for you. But a big piece of the puzzle too is just looking at your debts that you have. If you have high interest debts, maybe we look at consolidating that to kind of get those monthly payments down. I've done a lot of that lately where, once you consolidate those debts, and even though we are
And
putting
roll them into a mortgage?
roll it into a mortgage. Yeah. So if you've got like a line of credit or a credit card, you're looking at 10 to 20% interest, which can sting. And so
More than 6.5.
more than 6.5, right?
Absolutely.
Yeah. So sometimes it does make sense to roll it onto that mortgage and just ease up that cash flow, because you're amortizing that over 30 years versus making those, higher monthly payments on those sort of liabilities. So it can make a big difference, like thousands of dollars per
for
year.
sure.
Yeah.
Is 30 years the max that you can do?
For most lenders, for most traditional lenders, 30 years. I think some of the lenders, if you're already with them, they'll consider going a bit longer to help support you. But mostly it's 30 years is the longest, sorry. And then with alternative lenders, there's some going to 35. And there's a push to do even longer, like 40, 50 years. But that's a tougher sell, I think, with the government. So I don't know if we'll see that, but it
Right.
would be hugely helpful for people to have that option.
Even if they're like a 3-year term, if it just allows them to do that
Exactly.
in the short term until hopefully rates balance out,
Exactly.
that would be massive.
Yeah.
Yeah.
Yeah, exactly.
One thing that I find interesting is that in the United States, and please correct me if I'm wrong, you probably know better than I do, but my understanding is that people tend to get one mortgage and then they ride that mortgage right through the lifetime of that home or until it's paid off, as opposed to here in Canada, we do these like 5-year terms and then just keep renewing a 5-year term. What are your thoughts on that? Is there a benefit to doing it the way that we do in Canada versus how the US does it?
Yeah, good question. I think for us at least, I'm not exactly sure how the U.S. structures their penalties, but yeah, you'll see like a 30-year term mortgage, right?
Yeah, at like a reasonable rate. It's not like here, if we get a 10-year term, it's like, wow, this rate's going to really, it stings usually.
Yeah.
It's usually quite a bit higher.
Yeah, so I think, they have like competitive rates on these longer terms, but I'm not sure how their penalties are structured. So that would be interesting to see, how flexible it is to move around. So I would say then the benefit of kind of our options of shorter terms here are that we can really kind of match it with what we're doing financially. So, if you have a client who is looking to purchase and then they know that in 3 years they're going to be moving, well, I'm not going to lock them into a 5-year fixed
Yes.
rate, especially
sure.
right now where once
The penalty is huge.
rates drop, that interest rate differential penalty is going to be huge. So we can just match you up with a 3-year, because in 3 years you're going to be moving. Or even if you don't know, but there's an inkling you might, then it's not necessarily about what rate to take. It's more about like, how can we offer you the most flexibility? And maybe that is a variable rate because it's a lower penalty or a shorter term. So I think the benefit is that we can kind of pair it with our lifestyle a little bit more.
Right.
But again, I should probably do some more research on the penalties in the U.S. because I'd be curious how
Well, the
how do
land
you have
transfer
that?
tax is different compared to here, so it's a non-existent, but I'm sure they have something to keep people locked in, I would think, for a while. As far as your people that are refinancing, do a lot of people that are refinancing are thinking of staying longer in their homes, or do you think there's some people that are just refinancing to keep afloat, or do you think they're wanting to still sell? Obviously, there's different sections in time when you want to upgrade or downgrade, et cetera. But do you feel that you might see people wanting to hang tight for a little while longer than usual, or?
Yeah, I'm seeing a lot of clients sort of wanting to stay. And I think that's just because housing prices are so high and they've built up a lot of equity in their home over the last few years. So people are kind of happy with that and want to ride that out. So when you are refinancing, I think you're kind of committing to stay there for a little bit anyways, is what I'm seeing anyways.
Is there anything else that you would like to share with our viewers, our listeners, or anyone else that might be watching?
You are a happy owner of a turtle.
Yeah,
Okay,
that's
so on a
right.
personal level,
Yeah.
if you want to share
Yeah.
anything, but I'm just having fun with you. But yeah, no.
Yeah, for
On
sure.
a serious
And
note, whatever else.
dogs too. Yeah, and if you call me, you'll probably hear my dogs barking in the background at some point. So, but yeah, no, I think just reach out to your team and know that we're approachable. We're here to help. And if I nerd out too much about mortgages, just tell me to stop.
And it's always interesting. We tell our clients, if you have a question, don't let it, fester. Just ask us right away. Because in this way, once you get the question answered, then at least you can get to the next question, not stoop around and wonder, I don't want to bug them or I don't want to, interfere. But yeah, just reach out and then you can help solve a problem. At least, calm the waters potentially down the road.
Yeah, and with the experience we all have, we've heard it all, right? Like there's no dumb questions. We've heard every question, or as many as we could think of, right? So don't be afraid to ask. That's what we're here for. And like I alluded to in the beginning, I don't ever want my clients to spend hours, searching online for an answer when they could just pick up the phone or send me a text or whatever, and I could answer them, very thoroughly, very quickly.
What is that with our I don't know if it's our generation or like just this time frame in world history? We feel like we can't ask people questions. Like I know myself, I am probably the worst at it. I look up stuff online for hours trying to research instead of just making a quick and easy phone call to get
Somebody
the
who's
answer.
educated on what you need to know.
Yeah.
For
We
sure.
don't want to bug
no.
people, right? But yeah.
I
That's
know.
what Chat GPT might be for. It's like, all your answers right there.
Oh my gosh.
Oh.
Yeah.
No, this has been amazing. I think this has been educational, and hopefully people will have insight onto how to connect or with a broker and figure out how to, take away some of the pain that might be coming down the road, and
Absolutely.
hopefully can reach out to you and get things going and calm down waters, because it will get tricky. And if you can at least get ahead of the pain and know what's going to potentially happen, at least you can then, you know where you're going as opposed to not. So
Yeah, a bit more comforting. Yeah.
absolutely.
And it's short term too, hopefully, right? Like hopefully we'll be back in good waters
Exactly.
and we can all rest a little bit. So it's, as we all know, like real estate is the long game. It's not
Yeah.
a short game. It's the long game. It's planning. It's making positive moves. And don't always hear or believe everything the media is saying. That economics is a lot about persuading your behavior.
Right.
And it's very much, trying to bias you in a certain way. So
Yes.
it's okay. We've got you. It's going to
For
be
sure.
fine.
It's so interesting. You're doing this for 23 years. You've heard doom and gloom, honestly, almost like every other year, forever. Granted, we know there's going to be a tipping point where things will happen, but obviously nobody expected, COVID, inflation, and all that kind of stuff. So all in all, it is a solid investment, like you're saying. Don't listen to that. Before you panic, let's, at least try and get answers from all different areas to get a true understanding of what should happen over the course of time, not in one little segment that we're in now.
That's
What's that saying? Date the rate, marry the home.
Right, exactly.
Right.
Yeah.
So it's like,
Exactly.
it's a short-term thing, but don't stay out of the real estate market because you're only going to hurt yourself in the long run.
Yeah, the truth is there's so many people coming into Canada that unfortunately our housing supply is low.
Yeah.
And so definitely, your investment will pay off after we get through a blip, hands down. So
Absolutely. Yeah.
amazing.
And in 10 years from now, you'll be kicking yourself saying, I wish I bought 10 years ago.
Oh, yeah.
Even
Yeah.
though right now we're saying, are home prices too high? Should I wait? 10 years from now, you'll be kicking yourself. So
Sure.
get in there now if you can. In terms of, what rate should you take? Right now, I'm recommending to my clients to be mindful of their situation, what they're planning to do, because there's two different rate types. There's your variable rate, and then you have your fixed rate. We deal with mostly closed mortgages, which means there's a penalty if you break before your term is up. So if you're in a 3-year and you break on year 2, there's a penalty, And most people opt to take a 5-year mortgage. And statistically, 2 out of 3 Canadians will break their mortgage by the 3rd year of a 5-year mortgage.
Wow.
So that's why the 5-year rates can be lower. They're more competitive, but the banks know they're going to make some money on that penalty. So they can offer those competitive rates. So what's really important right now is because we are in a high interest rate environment. So the way I'll just touch variable rates quickly. They're a good product because they offer the most flexibility because they have only a 3 months interest penalty, which is usually less than 1% of the remaining mortgage balance, which is most people can handle that. And it can usually offer savings by the interest savings will negate the penalty. So that's positive. But with fixed rates, the penalty is structured as either the interest rate differential or 3 months interest, whichever one's greater.
So what do you mean when you say interest rate differential?
So
that sounds like
painful.
Yes.
It's painful. It's a great word for it. And basically the way I kind of think of it in my head, because it's just a calculation, but it's the money or the interest that the lender will miss out on by you moving away from them, taking another rate. And so right now with rates sort of being at their peak, hopefully, the fixed rates, the penalties automatically going to a 3 months interest. So if you're thinking of breaking your mortgage right now, if you're in a fixed rate, it's a good idea because you'll only have a 3 months interest penalty. It's defaulting to that. But once rates start to drop and you're locked in at a higher rate.
So let's say they're at 5%.
Yeah. So let's say they're at 5% and we go down to 3%. Well, then depending on the length of time left in your mortgage, that lender's missing out on 2% a year. So that's going to go to the interest rate differential penalty, which can sometimes be 4.5% of your remaining mortgage amount, which can be thousands of dollars, which can really
Like tens of thousands
of dollars. Yeah, we've seen them quite high sometimes. So I think what's really important is around the confusion of what rate to pick and what term to pick is how can you offer yourself the most flexibility. If you think there's a potential that you'll be breaking your mortgage, take a shorter term. And that's what I'm recommending right now is maybe look at those 3-year terms. You might be paying a little bit more in interest than your 5-year, but in 3 years, rates will probably have gone down, and then you can renew into a lower rate. If you're in a 5-year, you're pretty much stuck in that 5-year because of that penalty is going to hold you back. You're not going to be able to take advantage of those lower rates when they do come until the 5th year of your mortgage. So,
It's interesting that banks already have a calculation knowing that realistically you're going to break that mortgage in 2 to 3 years.
yeah, they know.
So
It's not surprising. Like banks always make money.
Yeah,
Exactly. So
Yeah.
I know it's always one of those things where you have to try and figure out, do you do a 3-year, even though it's going to, you always have to maybe factor in that penalty when you're potentially signing up
Yeah.
with a 5-year term.
And-
Right.
yeah, and it's at least worth the discussion, right? Like
Oh,
some
sure.
people enter into these mortgages and they don't know what their penalty might be. And at least we'll have the conversation and say, this is a potential impact on your finances or on your flexibility if you choose to take the 5-year, which can be great.
Sure.
It's a great product for certain people, but at least you need to have that conversation so clients know what to expect, right?
If you have a roadmap, at least you know what can happen, where the bumps are.
Yeah.
Absolutely.
Yeah.
Amazing. That was very helpful.
Absolutely.
Yeah. So Carly, if somebody wanted to reach out to you and say, hey, how do I get in touch with you? What do they do?
So the best way to contact me is probably to give me a call or fire me off an email. So my number is 613-334-5694.
One more time.
613-334-5694. Look, it's memorized. I used to have to write it down, but now I've got it. Say it so often. Or fire me off an email, which is Carly, which is KARLEE @moremortgages.ca. Those are probably the best two, but I'm on Instagram too. You can find me there. I try to put a lot of educational information out there. So instead of doom scrolling, just hop on there and you can find everything you want about mortgages. And send me a message too.
Thank you so much, Carly.
Yeah.
Thanks for
Really-
having me, guys. It's been fun.
It's been really fun.
Yeah.
Thank you. So I guess we'll have to chat again, keep things going, and then
Absolutely.
maybe reconvene and do this again down the road to give the positive side on what's been happening a year from now,
Sounds
potentially.
good.
Amazing.
Yeah, sounds